Just want to start off by saying thank you for following. Thank you for the likes and the comments. I do try and reply to many comments. One thing I have noticed in the comments is a lot of positive feedback, which is great, but also this sense that a lot of people are taking my work far too literally, in the sense that it's almost like it's gospel. I just want to warn that, I'm just like everybody else, right? I'm definitely not Nostradamus here, or I don't have a crystal ball. And it's very important in trading and investing not to fall for any one narrative or any one style or any one strategy. We're all pretty much susceptible to error, to being wrong, and every strategy, every style is essentially just providing a trader, if executed correctly, with a solid edge. And that's how I view my own work. I view it as something that if I study it and really focus my time and energy, it can provide a good edge for me in my trading and my investing, but I never fall in love with it to the point where I believe my own work is it and nothing else. Nothing else could be fact. So be aware of that, right? I'm wrong on my trades at least 35% of the time. So 35% of my videos, in theory, are probably, they may be on the mark, they may be close to being right, but a lot of them will just be wrong. But not wrong from the sense that the approach was incorrect, wrong from purely where I think price might go. And that's perfectly fine in trading and investing. I think if you come into trading wanting to know in absolute terms where price is heading, you're going to be set up for failure. That's my number one advice I can give you today, is that you need to be very flexible and very patient. You need to have an idea and an opinion, but you need to hold that opinion, be very confident in that opinion, but hold that opinion very loosely, in the sense that you need to know where your alternative scenarios are, where you're going to be wrong or where you could be wrong, and what is it and how is it you're going to approach being wrong when it occurs. Because I'm going to tell you right now, and I know you've all experienced this, you're going to be wrong often enough, closer to the 50% mark than you really want to believe. And if you go into a trade or an investment knowing that you're going to be wrong probably 35 to 40% of the time, and you don't have a plan for the 35 to 40% of the occasions, then you're really setting yourself up for some failure. And I see on YouTube quite a bit. I've spent some time on YouTube the last few weeks now that I'm posting some videos. I'm just taking a look at some of the channels. I can tell you little kind of not too impressed, to say the least, with a lot of channels and a lot of people just talking in really absolute terms. And I can tell it's because they really want followers to believe the narrative. But so I don't want you to fall into that trap. If you're going to watch my videos, be prepared for a lot of these to not turn out the way I think they will. And that's, in my book, as a trader, perfectly fine. I've accepted that fact many, many, many years ago, that I'm often wrong. And what sets a good trader, an investor, apart from the average investor and trader is that when they are wrong, it's not costing them a lot of money. It's not costing them a lot of capital. And I mean financial capital, but also emotional capital. I don't let a string of a string of incorrect calls, one, affect my income or my capital, or also emotionally how I feel about what I'm doing. I just get back to it and get on to the next strategy. If I make a mistake, that's more from a trading standpoint. So not putting on the right size, not taking the trade when you need to, not taking profit when you need to, not stopping out when you need to, things like that. Those types of mistakes can happen in a profitable trade and also in a losing trade. So, those are two distinctly different things. We're talking about scenarios where you develop a strategy and it turns out not being right. You just need to have a plan for that. So one thing I will emphasize in a lot of my videos, and I have in the past and I will going forward, I'll give you where I think the market's heading, but it doesn't mean the market's going to go there. Because perfectly honest with you, if I could predict the market with 80 and 90 or 100% accuracy, I wouldn't be making a video right here. Okay, I'm not here to sell you anything from that perspective. I'm just trying to tell you that it's like the law of averages. You really just have to keep batting a higher average, and over time that should equate to being more profitable. It's not going to happen in one trade or one theme or one strategy or one bull market. It's a long, arduous process that you need to develop within yourself and learn over time, that you just have to be consistent and consistently doing the right things, and not be so hung up on being right, but be consistent in your execution and your strategy. So that being said, I'm going to move on. I'm just going to cover kind of what I'm seeing on the 60-day Bitcoin cycle. I don't want to give away too much. And the other thing I want to mention is, I'm pretty sure you're aware, and I have it in my link, I do have a site, and I'm not going to pitch it here. It's not my goal to pitch it, but I have to say that I have to respect members of that service. And by that meaning, I'm not going to tell you, kind of exactly where I'm in and out, that type of thing. I'm not going to share the exact trades. And I'm not going to go into extreme deep sort of analysis on on a lot of this stuff. But I think I'll give you enough where I think it's going to really help. It's going to cover the overview of trading, not just the price, but just a lot of my thoughts on trading. So the image I have up on the screen right now is from the last video. If you haven't seen that Bitcoin 60-day cycle video, please go see that first. It covers what cycles are, how they work, how I see them in Bitcoin. I'll post a link right now up on the screen for you to go to that. Go watch that first if you haven't. Otherwise, right now, this is the image I showed. I think it was around day 40 at the time, maybe 45 at the time of a 60-day cycle, and they're basically saying that we're going to be heading lower. Where we stand today, this is the chart as it was last week on YouTube, and if I remove that, this is what's happened since. Okay, so it hasn't been straight down. I was probably expecting a little bit more of a sharper decline. That hasn't happened. It has been more of a grinding sideways to lower move, but we are stepping lower. If you notice these lines here represent daily highs in between drops. So we're stepping lower. So we have higher. So we've got lower highs developing on the way down. So if you take another one here and you sort of place it up here, you'll see those 4 steps going lower. And then on the low side, you've also got a bunch of lower lows. And let's mark that in a different color so we can distinguish between the bottoms here. Let's go with the blue. So you take that, and then you sort of see, we're stepping lower here, right? These are kind of the low points in an area of trading, and then the highs. They're all going lower, which means the trend is lower. And that makes sense because we topped on day 9, as I mentioned in the last video, and we're looking for a cycle low around day 60, give or take 10 to 12, maybe even 15 trading days. So the range where we expect the low is fairly wide, and that's just one of the disadvantages, I guess, of cycles is you don't get definitive numbers. You have to play with a range. But what we do see here very clearly is that we topped on day 9, and we're just now in this declining phase, right? We're just moving lower and lower. And what we're also seeing is volume is really starting to dry up, and it's really, sentiment's becoming more negative as each week goes by, and that's very natural in cycles towards the latter part of the cycle. So now we're on day 54 already, only 6 days away from kind of your average cycle length. We are in the blue box here, which is the timing zone. That's the area where if we form a low and rally out, there's a chance that it becomes a cycle low. Now we do want to see a decent amount of selling into a cycle low. We kind of want to see one of these events occur. We haven't really seen that. So I think what's happening now is we had a bull flag develop last week or so. We've dropped out of that bull flag. We're now trading near the lows for this cycle. I believe because we're on day 54 and we're getting very close to the next cycle low, that we're going to start to see an acceleration of a decline. Now, since the last video I posted where price was around 66.30, I think it was, we're down around 8% or 9% since that last video. I think we're going to get from here at least another 10%, which is around $300. I think we're going to blow this low here, which makes sense in a decline. So we're going to probably, I'm not using the right tool again. I think we're going to, let's take this. All right, so I think we're going to exceed that low there, which was around 31.20. That would make it what's called a failed cycle. It would confirm that the trend is still lower. And then I think we're going to look for some type of capitulation and heavy volume selling at this point, and then we can find a cycle low. What I don't know is, where does that low occur? Does it occur on day sort of 58 in 4 days time, just below 31.20? Does it occur just above that and then rally up? Or do we go again 2 or 3 times lower? That I can't tell you. I really can't. That's just the nature of the strategy. We have to live with the constraints of the strategy, and that's one of them. Right now, I've been short from all the way back up here. It's been very profitable. Worst case scenario for me right now is I'll walk out with a profit, because I won't allow a snapback rally at this point to get too far away without covering shorts. What I will tell you about sort of my trades is that I take some of these more recent highs in the downtrend, and I use those as logical stopping points. So this high here is a logical stopping point, which takes me out of a lot of my position, and this second one here takes me out of my position entirely. If this rallies up, if the market rallies from here and so it goes up, right, I have no patience with it moving above this line here. At that point, I start to get a little bullish. I suddenly get neutral in my position, and this now is where I'm talking about kind of the alternative scenario, where you have a very strong opinion on one direction, which is lower in my case, but I'm thinking about where I could be wrong. And where I could be wrong is if we maybe drop down from here and get to, say, the $3,200 area, maybe even do a double bottom test of the December 15th low, and then come rallying back up. Any one of those could work. Any one of those could form a cycle low here around day 56, day 57. That would be normal. And then a rally would be, a new cycle rally. It would be day 1, day 2, day 3, day 4, similar to this type of move here. But there is no point right now in trying to play the up move, a potential rally, when the trend is so clearly down. This is where you would need to let the market go if it starts to rally, because it's just a very low probability event that you can capture the gains well, pick the bottom first of all, and then take it higher. So I'm staying with the trend. The trend is lower still, and I'm looking to ride my shorts further and deeper as far as I can. So what I will say though is, so again, just reiterate, if we do start to rally back up, then you get out, you're not going to be short, and then you look to maybe say, okay, this is a new rally, this is a new cycle, where's an opportunity to get long? So if it came back up and it pulled back, you may be able to get back long in on the pullback, or if you're going to wait, you wait for maybe a break of this sort of area up here, 3,700, or even a trend line break, although it's not much of a trend, but just using those two tops from the cycle, breaking above that and then getting long. Don't worry about the market getting ahead of you. That's FOMO. You don't want to be chasing a market. You don't want to be fearful of missing out. Okay, not making a profit does not hurt your balance sheet in the end. What hurts your balance sheet is taking losses. Avoid the losses first, worry about the profit second. So this can go up higher, and then you'll find an opportunity to get back in long. So for now, what you want to focus on is kind of the short opportunity or the downside risk. So if you're trading long, you want to consider your options from a hedge perspective, or from sort of going into the dollar or to a stable coin. Or just be aware of your leverage in general. But essentially what I'm looking for is this big capitulation. Then once we get into these lower areas, if that happens, that's when you start to take some profit. That's when you start to look to get out. And then on any major decline, and let's see if I can bring the Bollinger Bands in here. Maybe that'll tell us something. Okay, so the Bollinger Bands here are not very clear, but we are right up against them. So the Bollinger Bands will expand very rapidly. But if we have a significant move over the sort of coming days, will easily fall out below those Bollinger Bands, and that will give you an indication that after maybe a couple days outside those bands, that the move may be too extended. So those will just be some signs that we'll be looking for potentially getting out. Point then is that if we get down into this lower area around day 60 to day 65, the odds for a turn becoming a cycle low become very high at that point. So therefore, that's when you want to be looking for long. That makes it easy to get in long, or easier to get in long. It allows you to potentially find a long trade on confirmation of a swing higher. So once we form a swing low, maybe break above the 10-day moving average at that point. Something like that can give us an indication to get back long and then take some of the new cycle rally. But too many people right now, I see it on Twitter, I see it everywhere else, they're too focused on the next rally when they should really, in theory, be focused on protecting themselves from what should be the next and final decline. Then, in due time and in due process, they can worry about the next rally. That's the way I see the market today. That's the way I'm trading the market today. And as I said earlier in the video, there's a good chance I might be wrong, maybe around 35%. So just be aware of that. Take that under consideration whenever you make an investment decision. You're on your own on this one. We all take responsibility for our trading. I'm just showing you what I'm doing. If it helps, that's great. If it doesn't, I wish you all the best and I wish you all the luck. If you like the video, give me a like. Share it if you like on Twitter or anywhere else. I'd appreciate that, and I hope you're all doing well, and good luck.